Hey guys, Wes here with Wood Financial Group. I'm glad you clicked on this video. Well, the market has been very exciting so far in 2022. We're just not getting a break. The market shot up at the first of the year, and ever since January 4th, as I'm recording this video, we're down about 6.5%. So I want to share with you kind of our perspective, but also share with you a little bit about how probably your accounts are being affected by this. First, what's going on? Well, one is that the Federal Reserve has committed to increasing interest rates, which means they're going to pull money out of the system. So it's like your lending rates are going up, borrowing costs go up, which means it's more expensive essentially to run an economy. And they're doing that to stage off inflation, which is extremely important. And we can't forget about the uncertainty in Ukraine and with Russia. Anytime we have issues that are overseas that can be as large as these problems that we're finding with Russia and Ukraine, there's going to be uncertainty in the markets. And last, think about it. The market has been on a great ride really ever since 2009. Last year, the market did, in some cases, over 30%. So having a drawback isn't that unpredictable. But where are we going to go from here? Well, we're watching it. We're keeping an eye on it. Nobody has a crystal ball. But what I do want to say is I'm not concerned that this is the next big drop. But we do want to know that, hey, these next few years are probably going to get stuck in the muck for a while. So what does that mean to your accounts? Well, for most of you guys that are working with us, as we've talked about, we preach income. And so odds are your portfolios are doing well, meaning you're still generating those interest and dividends just like clockwork. And a lot of your money may be insured, which means even though the market's down 6.5%, you haven't lost 1 cent. Where your other funds, perhaps managed at TD Ameritrade, are going up and down, probably down some from the highs, but are still generating an interest and dividend just like clockwork. I like to use a real estate analogy when it comes to investing for income. Imagine you have $500,000 in your investment portfolio generating you $25,000 of interest and dividends. That's the I. Well, that $500,000 may go up, may go down, but what's going to happen is that $25,000 of interest and dividends is going to remain the same. So right now, $500,000 may be down to, $490,000, but you're still getting your $25,000 of interest and dividends. It's kind of like buying rental property, right? You buy rental property, the market value of those properties are going to fluctuate. Well, right now those property values are down, but your income from the rent is remaining the same. And for retirees like you guys, for most cases, income is so important. So we're focusing on income. And if you're not spending the income, then we've got opportunities, which means we can take those interest and dividends, and as the portfolio may be down, now we can rebuy and catch some more stuff on sale, which means could increase your income later on. So even in volatile markets right now, I'm so glad that we're focusing on interest and dividends and income in your portfolios. But of course, with everything on the news, all the excitement, the uncertainty, any questions or concerns, reach out to us at any time at woodfinancialgroup.net. Call our office at 826-5749 about any questions you may have on your portfolio. Hey, thanks for tuning in, and stay in touch.